Hey guys, been a while since I posted a video. Last week I went on vacation. While I was on vacation, I traded a little bit. I traded the morning session, but I didn't really want to, you know, ruin my vacation with too much trading. But trading's like any other skill. You have to keep at it a little bit just so you won't get a little rusty. So I did trade, and I came back yesterday. Yesterday I kept it light. I traded really light yesterday, but today I was back in full swing, and today was a really good day. Outlier day, really strong, nice big moves. But as I was on vacation, I was just thinking, why do traders fail and why are traders struggling? And this is just my experience, and there's a lot of other different reasons why. But I just wrote down four that I like to talk about, and one that I really thought about that I think traders don't really understand is the problem is I think traders focus too much on entries. Like too much is focused on entries, and that they think if they get the perfect entry and this is going to make their trading come together. And I need this, I need to see that, I need to see the moon and the sun touch, and just all this craziness. And I feel like traders focus way too much energy on entries, and they don't understand that a trade is 50-50. No one, once you put a trade on, you do not know what's going to happen next. You don't know. I mean, and let me break it down to you like this, because you basically can get into a trade and it can be going in your favor, and at in one instant, one huge institutional trader, hedge fund trader, um, you know, can just come in and say, I like you're short, and they could just say, I want to buy this area, and they could completely change your trade. One huge trader can change your trade, and they could just aggressively start buying, and therefore you're wrong. So in order to know what's going to happen next, you have to know what everyone's thinking, and we all know you don't know what everyone's thinking. So they need to understand that each trade is 50-50. Like, you can pretty much do a coin flip. You can just flip a coin, and if you have really good um, risk management skills, you can still have a positive expectancy. That's the key right there, of having really good risk management to limit your losses when you are wrong. That's the key right there. And another thing is, a lot of traders that I know who failed or are struggling, they do not obey their stop, because they, for whatever reason, something happened where they got stopped out. Then the market went 20 points in the opposite, in the favor that they were thinking. So what do they do now? They move their stop, and then on this particular time, it just keeps going against them. They do not obey their stop. You have to obey your stop, and I think this is where it helped me a lot when I was trading at a prop firm. And I remember we had like a $50,000 account. We traded stocks. We couldn't, we had to prove ourselves we can manage our risk. And your daily stop was like $100 or 150 or something like that. It was like really small. You couldn't do more than 200 trades, and you can't enter no more than 100 lots, 100 shares at a time. So you would just see traders get up, and within like 5 minutes they would be, their risk parameter, their risk is done, and they would go to the demo, as we call it. No one wants to trade in a demo, or they would just go home because they're just sitting there all day and they can't trade. So you just start getting to the point where you was like, you're all right, I'm just gonna take my stop, because you would rather trade all day than slip and just mess up, and one trade can cost you your whole day. So I think that alone for me helped me to obey my stop. Just take my stop, move on. So now it's like it's not even a thing I even think about. Like, before I get into a trade, I would know where I'm gonna get stopped out. It gets to that level, I stop out. I don't think twice about it. I don't care about it. I don't get angry about it. It's part of trading. It's part of the game. You have to understand that. Obey your stop. And I just see a lot of traders, they will move it. Um, there's, just all kinds of craziness going on in their trading. And like I said, it's because they probably got stopped out, and then it went in their favor, so next time they're going to move it, and then the opposite happens. So obey your stop. And then another thing that I wanted to talk about too as well is, I see a lot of traders waiting for confirmation. The traders that I set with, the best traders in the prop firm that I set with, and the best traders that I set with and traded with them, I noticed something. I noticed they don't wait for confirmation. They don't really care about confirmation because think about it. The more confirmation you need, the bigger your stop is going to have to be. And I'm going to give you guys an example. Traders I know who trade zones. Okay, say for instance, let's just use this zone. Market came pull back, boom. So there's some sellers there, right? Obviously. So this would have happened to a struggling trader, or a rookie trader, or a failed trader. This will happen. Couple things. This will have market come here. It don't go quite to the zone. The market will start to take off. Oh my God, I'm gonna miss the trade. They jump in short. Boom, they're stopped out. Okay, but say you that's really a huge rookie mistake. But say you passed beyond that. You understand, I'm just going to wait for my levels, and if it hits my levels, I'm going to take it. Well, what happened now is it hit their level, and they're going to wait for confirmation, right? They're going to wait for confirmation. The market's going to do this, fall. They're going to get in around here somewhere because that's confirmation. They're going to put their stop 1 or 2 ticks above this zone, and what do you know? Market comes back, stops them out, then runs 18, 20 points. Boom. Same. You see how you wait for confirmation? Now let's do the opposite effect. Now traders I know who use levels, and traders I know who we don't care about confirmation. I don't wait for confirmation because at the end of the day each trade is what 50-50. It does not matter. There's only a couple different ways I feel like you can trade. You don't without waiting for confirmation. Like if the market gets here, a trader I know that trades level, they would just get in. Okay, they would get in and they would say to themselves, now think about it, if I got in here and I put my stop from here to here was like 4 points, 5 points. But if I get here and I put my stop 4 points, the market, my stop is way up here. I have room now. So now if the market does this, come back, boom, I gave myself enough room for the trade to work. You understand? Remember, you're playing this level here, right? The market's not going to come exactly to this level in turn. It doesn't work like that. Sometimes it does, but most likely it doesn't work like that. So you have to give it room. So all this 1 or 2 ticks above these levels are crazy to me. Like you need to give it some room. So you can't wait for confirmation. You wait for confirmation, your stop is going to be bigger. So or you trade how I trade. Now I scale in and scale out. I'm not an all-in trader, all-out trader. I'll put a third on here. Market comes back, come back. Maybe put a little bit another. If I feel like this is another sell signal, I'll put another third on, and I'll start to scale out of my position. See, but at the end of the day is I gave myself room for the trade to work. Because if I put a third on here and my stop is way up there, who cares? I gave the trade some room to work. That's what you have to understand. You have to understand the instrument you're trading. You're trading the ES. You're trading the index futures. They run, stop, reverse. Run, stop, reverse. Very rarely are they just going to hit a level and reverse and just go. 9 times out of 10, that's not going to happen. This is exactly how the market trades. It's going to come to this level, boom, play around, go against the level, run, stop, reverse, boom, then take off. And if you're not giving yourself enough room to participate when this thing takes off, you're going to get stopped out 1, 2 ticks above here every single time. That's rookie areas to put your stop. You have to not wait for confirmation, and you have to give your trade room to work. When you're trading ES, that's the only way I see you can make it. And don't put so much emphasis on entries. Like I said, you can typically do a coin flip. And if you have good risk parameters, good risk management, you can make sure you have a positive expectancy. Now, if you add a little filters to give yourself a better trade, a better entry, you don't have to focus so much on the entry itself, because you like I know I can just get in somewhere here, and I know, okay, these are the levels I want to get in at. Just give you an example, and I know with my risk management skills, I'm gonna be able to work this thing in and out until it breaks. That's just my risk management skill. It doesn't matter if I got in here or here or here or here. I'm still going to be able to work it and be able to control my risk because I'm doing 1/3, 1/3, 1/3. You guys get what I'm saying? Or if I do just play an all in, all out level, I'm going to get in here. I'm going to give it room to work, and then it's just going to go or not go. Those are pretty much the key things I see why traders fail. Wait for confirmation, focus too much time on energy, don't obey your stops, and you have to understand the market's 50-50. There's nothing you can do about it. So I hope this helps, guys. If you have any questions, put it in my journal.